What's going on, gang? You see your boy in a suit. Yes, sir. Yes, sir. I told y'all in the beginning of this year, I'm leveling up. I'm upgrading. Now, it took me a while. I know I've been off the channel. I know I've not been as consistent. To be quite frank, I've started work at an actual firm I can't disclose. So I've been a little busy. But now that I've settled in, I've moved to New York. Hopefully, I'm going to be more consistent now. I'm going to get stuff going. So make sure you stay subscribed. Make sure subscribers are coming out, right? I got some really, really good pieces of info that is really going to take your trading to the next level. All right. So understand this. Two things before we start the video. One, like the video. If you like the video, in fact, I know you're going to like the video. So just start by liking it, right? It helps me. See, I'm evolving. I got this suit now. I'm trying to evolve. And if you like my videos, it helps my channel grow. YouTube starts pushing it out to other people who might need this info. So do it not just for me. Do it for those who need the info. And number two, subscribe. Make sure you subscribe so you can keep getting the info. And the more subscribers I get, the more they push my channel out and the more people get to see this content. Actually, there's a third thing. Full disclosure, I am not a financial advisor. Nowhere in this video will I be suggesting in any form or fashion what to buy. Neither do I require compensation for suggesting, or I'm not suggesting in the first place what to buy. And so therefore there's no compensation due for suggesting anything because I'm not suggesting anything. Okay, full disclosure, I'm not a financial advisor. I am just going over a general technical strategy that I use in my own trading that you on your own are not. I'm not encouraging you to use it. It is literally just for your own fuel and personal education. Okay, now without further ado, let's get into the video. Okay, so today what we're going to be going over, I'm going to be showing you guys how you can utilize correlation between different pairs to really maximize your profits and your gains. All right, so what's the first thing I'm going to do here? We're looking at the dollar index. DXY, dollar index, basically a composition of different currencies in a basket in relation to the singular dollar, right? So they take the the euro, the pound, a couple other currencies internationally, and they put it into an index, and they see how those currencies are doing relative to the dollar. So when the DXY goes up like this, that means the dollar is becoming stronger. It's appreciating against other currency pairs generally. So that's why we say the dollar is getting stronger. Stronger in comparison to what? Stronger in comparison or relative to who? To what, right? Stronger in comparison to other currencies around the world. So when you see this large increase over the past decade, the dollar has generally done very well against other currencies around the world. That's why a lot of people, if they want to just keep their money safe, typically we'll just put it in the dollar and make like 2% a year, right? That is definitely a trading strategy that some people use. But however, I don't use dollar index for anything of that sort. I'm not trying to make 2%. I'm trying to make 2,000%. Come on, man. All right. So when you use a dollar index, you gotta understand that this dollar affects other currency pairs like AUD USD, EURUSD, GBP USD, NZD USD, anything that has USD in it, because that means that as this index is increasing, right, like I said, the dollar is getting stronger in comparison to other currency pairs like Australian dollar, euro, pound, New Zealand dollar, Swiss franc. It's getting stronger in comparison to these currencies. So I like to do some initial analysis on where the dollar is at before I start making more longer term projections on other currency pairs. So right now, in the past decade, we've been seeing the dollar generally appreciate, right? The story of the dollar is that it's generally been going up, right? We had a couple of spikes here. This one was in 2017. This one in 2020. This is this was right as the pandemic started. As you can tell, this is around March, and then it just starts to come down. However, we are seeing a bullish sign if I've ever seen one. This is the classic. I mean, if you don't know what this is, what are you doing here? Like, if you don't know what this shape is right here, this W, what you need to go do immediately is pause this video and go take my Intro to Forex course, because this is fundamental stuff you gotta know, right? I have it on my YouTube. It's on my homepage. If you go and check it, you'll see my course. and you should go watch every video there. It's actually very, very awesome. I used to charge about $40-50 for it, but I just put it on YouTube for free, and you guys can go ahead and have it. I would recommend taking that course. But look at this W, right? It's what we call a double bottom. Now, why is this so important? I'm going to explain something about structure real quick. When things go like this, right, it's generally trending upwards. This is what we call higher highs and higher lows, right? Higher high, higher low, higher high, higher low. So this is a higher low than this low. That's why it's called a higher low. And this is a higher high than this high, which is why it's called a higher high. When things are going downwards, right, they're usually going like this, right? So this is a, this is a high, this is a low. This is a lower high than this high, lower low than this low, lower high than this high, lower low than this low, right? And so things are generally going to keep going in that direction until you see a cause for change. So here we saw this high, low, higher, lower high, lower low, lower high, lower low, lower high. But we didn't get a lower low. That's what we call a reversal. And if you zoom in, an ICT strategy is a three pin, right? Let's remove this real quick. 3-pin strategy, where this pin and this pin are both higher than this middle pin, right? It's a triangle, right? It's reversing, right? It's reversing because this candle closes higher than this candle did. So I'm saying this candle closed higher than this one. So that means it's probably going to continue to go up. All right. So when you see this lower low, right? So you see a lower low, lower high, lower low, lower high, lower low. But you make a lower high, but then you don't make another lower low. What's probably going to happen next is that you have a lower high. So you have a higher high because this is a higher low. This is a higher low, not a lower low. It's a higher low than this low. So what usually comes after higher lows? Higher highs. Then we get another higher low, higher high, higher low, higher high. Now, before I can confirm that the DAXI is going to really be bullish, is when not only you see this higher low, but when you see a higher high. If we can break this level, I'm going to officially be bullish on the dollar index, especially given the longer term trend. We're generally going up, right? It didn't even come and touch this support, right? It stopped above it. So this is this whole area is a higher low compared to this low, right? So I'm still bullish, right? And so when this goes above here and then creates, a lower low, sorry, a higher low, my bad, right? And continues going up, yeah, that's for sure bullish. And when you really want to capture a trade, to be the most safe, you want to capture it on the on the second confirmation, right? On a second confirmation of a higher low. So when you get this higher low confirmation, this is where you want to enter. You'll have something like this. You can draw your Fib, you can draw your Fibonacci, Fib retracement. Wait for it to come around this level, this box level right here, right? This box level right here, wait for it to enter, and then you include your position. You put what we call you put a long position here, buy stop. Right, keep your stop below that recent low, right, and then shoot for your target. Next target should be an extension, maybe like to the negative 0.5. That's a good 1 to 5 trade. I mean, that's fantastic, right? So actually not 1 to 5, 1 to 3, my bad. So why is this so important? It's beginning like it's going to look like a strong season for the dollar. So what does that mean? If you look over to AUD/USD, this graph is almost a direct reflection of what's happening on the DAXI. The dollar is going up. And remember, when AUD/USD goes down like this means the dollar is appreciating. Or in other words, it takes more Australian dollars to buy $1, right? The dollar becomes more expensive. The dollar is appreciating, right? And so that's why we've been seeing this recent downtrend in AUD/USD. So you have, in one of my other videos, the reason why correlation is so important is because in that other video I talked about confluences, right? I'll even attach it to this movie we're talking about, to the thing we're doing right now, right? We're talking about confluences here. This is another confluence that AUD/USD downwards is something that is probably going to continue to happen, right? And when you trade, you want to have as many confluences as possible. So we have established one confluence, and that's the correlation between the DAXY and AUDSD. We confirm that they're lining up, right? The dollar is looking like it's going to continue to be bullish, and so therefore this is probably going to continue to go down. So we're going to look for downward opportunities, right? I'm just going to check out the daily real quick, right? What are some important things? Actually, let's go back on the weekly. What's some important things we can cover here? There's this initial support level that was broken, right? It was broken, and so you got some liquidity captured there. Then it came past this trend line, some more liquidity captured there, all the way to mitigate this particular institutional candle, right? This buy, the large sell-off that came off after, and it was mitigated at the exact T. Look at that, that's pretty cool. We got an imbalance that was here, that was filled. I can just delete that, not really relevant, right? And there's another imbalance down here. There's another imbalance in between this candle right here, in between this blue candle right here, right? In between this blue candle and this next blue candle, right? This whole white space has no wicks in between it, right? So that's an imbalance, and it's coming to fill that, right? So that is a second confluence, right? This is a third confluence. When this got mitigated, we knew that they had, mitigated their orders and they're ready to sell off finally, right? But here, there's another imbalance. That's a third confluence. So there are three confluences showing that AUD/USD is probably going to continue to fall. By the way, remember, I am not a financial advisor. I'm not telling you that it is going to for sure and suggesting that you should short it, right? I am simply saying that this is a technical strategy that showcases possibilities of what could happen, right? Let's go down to the 4 hour, check it out real quick, see if there's anything pertinent really here. Unnecessarily, no, nothing very serious that I'd like to really check out here. Maybe actually, no, nothing important, right? Let's go to the 1 hour, check it out recently. So this is where they got mitigated on top there, right? So really what we're just looking at here is just a bunch of series of higher lows and higher lower highs. Low, this is a high, low, lower high compared to this high, lower low compared to this low, lower high compared to this high, lower low compared to this low, lower high, lower low, right? Come down here, it's probably going to be a lower high developing very soon. So I'd be pretty cautious, right? Because you looked at we've got we had these lower highs, lower lows. Those are healthy. Those are healthy movements. When you have a strong downward pressure like this, and you look at this, this bounce back level. I mean, you see how buy side volume is picking up here, right? Buy side volume is picking up here, and you see that it's starting to consolidate in a sideways direction. You have this. If you look at this wick, this large wick right here. Let's go down to like the 15-minute, right? Look at this big sell-off, right? That takes off all the liquidity from here, right? It literally took off all that liquidity, right? Came back up here and mitigated right here, right? That's a smart money trade if I've ever seen one, right? And you can play the retracement, right? Something you have to be careful though is look at this other institutional candle. This one right here. That sold off immensely after capturing the liquidity here. That mitigated this institutional candle that took out this liquidity, right? So this is probably going to get mitigated. So in the short term, I could definitely see this rising back up to here, right? And I think that could be a pretty good trade for myself. I'm not suggesting anybody should do this, by the way. This would be, like a typical trader probably would do this, right? Where they would probably aim, for some more downward movement, right? That could be possible, right? You keep your stop like above here. And at the open of the institutional candle, when it gets to mitigate that, it comes down. Right? And that is a That is a 1 to 4 trade. You see, trading is not hard. You just have to be patient and wait for opportunities to arise, right? And so here at AUDUSD, you can also look at the 5-minute. Okay, it just confirms further what we were talking about. You can see that the real sell-off action started from here, right? And that's where it was kind of mitigated to come back up. And we're generally in the idea that AUDUSD is going to continue to fall. And so I would be, someone, someone who would, trade something of this caliber would utilize those correlations, right, to formulate probably a sell side or a selling off or a sell stop right here, to enter a trade, because the 3 or 4 confluences that go together showcase the AUDUSD is most likely probably going to continue to go down, right? And so, by the way, I just want to say it again, I'm not a financial advisor. Keep saying that. And so that's just my ideas. Hopefully this video has been super helpful to y'all, right? Spent a lot of time going into this and doing these things and analyzing this even before I start the video. So would love if you guys could share to your friends. Please please subscribe, like and subscribe like right now. Like you can do like right now, and then like you would have subscribed and you would have liked, and you would feel good because then you helped somebody today. All right. It's been a pleasure being on YouTube with you guys. Till next time.